because it's all been about the mega cap stocks coming in. If you look at the performance of the S&P 500, the relative strength of the equal weight versus the cap weighted index, you've seen that you've seen outperformance from the cap weighted index. There are some good things to like about the market here, but every time the Fed comes up, every time something good happens, a Fed official rears their head, and they seem to think that they need to be very aggressive, continued very aggressive going forward, even when the economy is showing signs of slower momentum. Housing's basically dead right now. Manufacturing's slowing. Even employment. Today's report was better than expected, but the pace of job growth has been slowing relative to 2021 averages versus the average earlier in this year versus now. So, you almost have to take a step back. The Fed should, and see what's going to happen. It's interesting. 6 months ago today, Powell took 75 basis points off the table. Yeah. And now over the last 5 months, we've seen 4 hikes of 75 basis points. So, these things take time to work their way into the economy. And I think the Fed should look at that and take a step back and let that happen. Because it's not like if things do turn south that they can just flip a switch and make things everything right again. Fed policy takes time to work itself through.
So back to the growth trade question. I know you've been looking at the relative strength of the S&P and the NASDAQ for clues about where this goes next.
Yeah, so if you go all the way back to the financial crisis, there's a trend line of the relative strength of the NASDAQ versus the S&P 500. The NASDAQ has steadily outperformed in this ever since the Fed's become increasingly aggressive in hiking rates over the last 6 months to a year. We've seen the relative strength of those growth stocks really come in. It's at a critical point at this level. So I think in the next few weeks here, as we get into Thanksgiving, we'll have some clues as to whether that level will hold or if the growth stocks trade is going to see some notable weakness going forward, continued notable weakness going forward.
Yeah, and we're showing that now. I guess, Paul, a lot depends on where yields go, right? As long as the 2-year yield continues to make new highs. It's down a little bit today, but the 10-year is a little higher.
Yeah, I mean, day to day doesn't necessarily matter. The overall trend is higher. We've seen unprecedented increases in the Fed funds rate over the last 5 months. And so that's going to be, you can't get anything worse for growth stocks than that, aggressive hiking of rates.
Well, one thing that's helping today is the semiconductor stocks are rallying near the top of the market. That sector's been hit hard.